Hi, this is Anthony and welcome back to my show. The title of this video might seem a little confusing, but it'll make a lot more sense in just a moment, so don't worry. But in the meantime, I'd really appreciate it if you click the subscribe button if you haven't already. It really helps me out and it doesn't cost you anything. Most of the videos that I make are about investing in individual stocks with a lot of emphasis on certain companies that have been beaten down into the penny stock range. These are not necessarily ones that I'm recommending, and in fact, in most cases, I repeatedly warn people against because the financials of these particular companies are terrible, and I believe that many of these companies are headed towards bankruptcy, or else will have to be recapitalized and existing shareholders lose even more of their money. Companies like Arcimoto, Nano Dimension, Solo, and Rush Street make for popular videos because there's a lot of people out there who have invested money into them and in most cases lost a lot, often in many cases 90% of their money. I would say that companies like these and the stock that they've issued are generally junk. From time to time they may pop up and you might have a paper gain, but in the long run I'm worried that many of these companies will eventually cause shareholders to lose all of their money. Of course, it's your money. You make your own decisions. And while I think that there is no one model portfolio or investment strategy for all investors, most investors, at least in the United States and other Western industrialized countries, should strive to have a well-balanced long-term portfolio. If you want to set aside a small amount of money where you can speculate in extremely risky securities, that might be appropriate for some people. Okay, I want to keep this one short today, and I've already mentioned what I consider to be junk stocks. But what about garbage stocks? Well, that may sound like the same thing to you, but here's the thing. There are some stocks that are garbage stocks that can really make you money over the long term. They are the garbage haulers. The two largest in the United States, which have about half of the market share of the waste hauling and recycling industry, are Waste Management and Republic Services Incorporated. Now again, as I mentioned in all of my videos, I'm not a financial advisor. This is not financial or investment advice. This is investing entertainment on YouTube. But what I want to do with these videos is to not only warn you against making mistakes when investing in hot story stocks without considering their financials, but also consider putting on your radar those more financially secure companies which, after you do your own thorough research from multiple sources of credible information and looking at the financials of the company while considering your personal investing strategy and needs, these might be some companies that fit into your own portfolio of individual stocks. And I think for many, if not most people, having a large percentage of your investments in well-diversified mutual funds is probably a prudent course of investing. Let's take a quick look at Waste Management. At first, we'll look at their max chart, which goes back to 1988. And I'm sure that there's been some splits, but these are taken into account. So an investment at the end of September 1988 would have returned close to 3,000% as of the day before Thanksgiving in November 2022. However, one thing to take into account is that from approximately 1999 to maybe 2014, which is about 15 years, the stock had gone sideways for the most part. Looking back from today, it would have been worth holding on through that, but when you're going for over a decade of no growth in the stock price, that's hard to stomach sometimes. Okay, let's look at the 5-year chart. Over 5 years, it's up just over 100%, so roughly 20% growth year over year. And then, of course, the general stock market has been beaten down in the current bear-like market that we're in. For the past 52 weeks, you would be down slightly over 1%, and year to date, you'd be up approximately 0.75%. And as you can see here, it has a current dividend of 1.59%. Okay, let's look at their rival, Republic Services. Here, the chart only goes back to 1998, so take that into account. The previous max chart, which was for Waste Management, went back 10 years earlier. For Republic Services, over the past 24 years, you'd be up 693%. If we did some simple math and take 693.52% and divide it by 24 years, you get close to 29% per year. I understand that's not exactly how percentage gains are calculated because it's not taking into account compounding, but it'll give you some idea. Now let's look at a 5-year chart. In 5 years, Republic Services is up 118%. Over the past 52 weeks, like its competitor, it's down just a bit, in this case 1.78%. And year to date, it's up 0.38% or 52 cents. And in this case, the stock pays a current dividend rate of 1.46. Let's look at a very brief thumbnail of the financials, in this case just looking at the diluted earnings per share. And here they show the past 4 whole fiscal years, so 2018 through 2021. And you can see the earnings per share kind of bounce around, which is not as preferable as a continual increase over time, but still much better than many securities that we find people investing in. And here we have Republic Services, diluted earnings per share. And again, they're bouncing around a little bit. But from 2020 to 2021, what we see is diluted earnings per share increase of $1.02, which is somewhat impressive. Again, I'm not making a recommendation on anything here, other than recommending that you might do your own research on the financials of these companies and keep them on your radar. I think something like garbage hauling is one of those industries that is somewhat recession-proof. I could see if the economy takes a downturn and there are bankruptcies, then some commercial customers may disappear and therefore those accounts become dormant. But individual household customers, no matter what the economy does or what your employment status is, if you live in a single family residence, then you're still going to generate some amount of garbage, which will be picked up on a regular basis, and you'll be billed on a monthly or bi-monthly basis. And certainly there's a similar situation if you live in an apartment or condos. So these businesses are not 100% recession proof, but probably the closest thing to it. If after you did your own research and you decided this sector was one that you would like to invest a small part of your portfolio in, and you asked me which of the two would I pick, I'd say, well, I'm not going to recommend either one, but why not buy both? Personally, I don't own either of these, but I like the concept, and now that I've paid off my property taxes for the year, once I take a look at other oncoming expenses such as semi-annual auto insurance, I think I'll probably allocate some of my future Roth IRA contributions to purchasing some shares in both of these companies. Okay, I want to keep today's video very short. That's all I have to say for right now. Please leave any comments in the comment section below, and I would love it if you liked this video and also hit the subscribe button. Again, thank you so much for watching, and good luck in investing.